Rick, the numbers, please, for November jobs report.
The November jobs report hitting the wires and pretty darn close to expectations. 227,000. And the revisions haven't come through yet. Oh, they are starting to come through now. If we look at 2 months' worth of revisions, we're going to subtract. Actually, I take that back. We are going to add 56,000 for a 2-month add. Now, let's look at the unemployment rate. It ticks up from 4.1 to 4.2%. Now, this is interesting because this equals where we were in June. Let's see where we were, 4.2. In August, we were at 4.2. We were at 4.3 in July. So even though it ticked up, we have been higher. And that 4.3 read that we had in July was the highest going all the way back to October of 21. So very important area we're starting to come up against with respect to the unemployment rate. Now, if we look at average hourly earnings month over month, realizing they were pretty strong last month, they remain strong, up 0.4 again. So that's back-to-back up 0.4. That is a solid read. And do remember, the highest read we had all year was in January, up 0.5%. Now, if we look at average hourly earnings on a year-over-year perspective, also remains very solid, up 4% again, back-to-back 4%. Now, if we look at how that pans through, the highest levels were in the beginning of the year also at 4.4, and then we had 4.3, then we had 4.1 in the first 3 months of the year. But this is a resurgence coming back to some of those levels. If we look at the average hourly work week for employees, that's 34.3. 34.3, that would be about the eighth 34.3. Oh, I'm sorry. Last month revised to 34.2. So now we've had 7 of those this year. It's pretty much where it's been hanging out. If we look at labor force participation rate, it moves down a tenth. Not good. Actually, down a tenth in the rearview mirror, gang. But if we were expecting a number at 62.7, last month it was 62.6. Here we are at 62.5. Which equals where we were in May of this year. To find a lower number, you have to go back quite a ways. You have to go back to January of last year to find a 62.4. And finally, the underemployment rate, the actual 4.2%, that's called U3. The underemployment rate is monitored U6, and it comes in at 7.8%. 7.8% versus last month, 7.7. 7.8 is the highest since August when it was 7.9, and 7.9 is the highest that we had for all of 2024. Interest rates like this number. They like this number. If you looked at last month as sort of an anomaly with all the issues that could have affected it, whether it was weather, hurricanes, or strikes, this is somewhat of a nice bounce back. Had a positive revision, but it kind of puts us in a pretty sweet spot. That's what I think the markets are telling us. Pre-opening equities, of course, are making new futures highs on the session. So it seems as though the markets are taking this pretty well. If you look at a 409 and 2-year, remember, 2-year closed at 416 yesterday and last week. Okay, so we're now down on the week, basically 7 basis points. If you look at a 10-year closed last week at 417. It's hovering right under 416 at the moment. Back to the panel.